Hi all, welcome back to Budget Law. My name is VK, and as you may have seen, or if you recall, in the previous tutorials, we focused on cryptos and stocks, the essential portfolio, how to build the essential portfolio tracker for your crypto investments as well as your stock investments. This time around, I really want to focus on the Google Finance formula, which is extremely powerful. And what we will do right now in this tutorial, we will recreate from scratch the watch list. So we will apply different ways. We'll apply Google Finance in different ways. And there will be two instances, which I think you will really enjoy. And number one, this is how can we combine together the Sparkline with Google Finance. So it's Sparkline formula and Google Finance. So we can recreate the dynamic trend line. And also what we will do is that we will have a year-to-date returns, which means that we'll have to combine the Google Finance with the index function to make sure we create once again this dynamic year-to-date return, and it updates regularly daily on the basis of the price of the latest price of your equity, of particular equity within your portfolio. So let's deep dive into the Google Finance and let's build a watch list from scratch. Okay, so here we are, and this is the watch list, right? You have seen this. By the way, once again, you can get this template for free. This is the essential one. But nevertheless, I think given that we are focused on the educational material, I really want to focus and emphasize how great and cool the Google Finance formula can be. So as you can see, we have different attributes: ticker name, list, the last previous change, percentage change, volume, year to date, and 52-week charts are the ones that I really wanted to focus more. Market cap, earnings per share, and obviously PE ratios, everything that I think it gives you a really powerful way to track your portfolio or stocks which may become part of your portfolio. So what I will do right now, as you can see, there is a completely empty watch list here. So, and by the way, there are a couple of indexes here, but I'll leave it for now. As you'll see, it's a bit more complex. Maybe I'll give it, I will explain further down the line. But for now, I really want to focus purely on the equities, right? That you may have, you may be interested in the portfolio. So let's start with our Google Finance formula because that's what we want. So for the Google Finance, as you can see, the first attribute is the ticker. So we'll be referring to the cell B1. I'll pressing Fn F4 in my Windows laptop to make sure I'll lock the column, and then which will be obviously cell 1. And then as you can see, when you have the attribute, and the attribute will be name of the ticker or ticker. And there you go, Apple Incorporation. Incorporated. The idea behind is that you can press this blue dot twice with your mouse, with the left button of the mouse, and that's it will be an automated kind of filled automatically, and you will see how easy it is. Even for example, in video, you can see we can check whether it's correct or not, which it is. So let's go for more. What I can do, just by the way, to simplify this as a suggestion, but as long as you understand what you're doing, if I'll press Control C, Control V, you can see nothing changes, right? So we have Apple both, but all I need to do right now is double click here, and instead of the name, all I need to do is type price, and this will give me the latest price of the Apple stock. I think Google Finance has about 20 minutes of updating the price, so that's where it's not like giving you precise actually, but it will update the price of the equity within 20 minutes. It's okay, I'll accept suggested autofill, and as simple as that. So the previous close, which means that we want to know the price at which the stock has closed yesterday. Again, I can Control C, Control V, and here's where we need to dive a bit more into the attributes. Obviously, we'll delete the price attribute. And I just want to go on top here, and as you can see, if, by the way, I think it's very important to understand that Google Sheets provides you quite detailed options when it comes to the how to use their formulas, the Google Finance formulas. So if you press Learn More right now, so you can see the help part here appears here. And let me, okay, perfect. So I'm gonna just quickly move myself here, make sure I'm less visible, and I'm actually moving myself to this part right now. So the Google Finance sample usage syntax, which is what we want, but the attributes is the part that we are very much interested in. So we have price, open, high, low, volume, market cap, trade time. uh, As you can see, data delay. Like this is very powerful thing, actually. So what we want is actually as simple as close yesterday. So that's what we want. So our attribute will be close yes. So that's what we need to type within our Google Finance formula, and you will see that again perfectly fine if we will want to suggest to actually to accept the suggested autofill. I'll do that. So this is the price at which our equity has closed yesterday. And for the change, it is as simple as we want to make sure what's the latest price minus the previous price, the price that has closed yesterday. And there you go. That's the difference between those two. So that's how we calculate the change between the current price and the previous close. I'll accept the suggested autofill. So you can see some equities went up, some went down for $1 or so. I think actually Netflix went by $8 up. But obviously, let's see. Um, don't get fooled by the number here, because what we need to know is the percentage to see the actual reflection of this. We're really of the growth or how much increased or decreased the equity. We really need to understand the percentage. So all we need to do right now is we need to there are a couple of ways to do that, but essentially what we can do is we can have this the last price minus the previous close divided by the previous close, and let's see how much the price has increased. So it's increased by 0.41%. I'll accept the suggested autofill, and there you go. So actually Netflix, when we look, although it has increased by nearly $9, it only increased 0.8%. The biggest increase so far has been this NEO Incorporation ADR. I'm not sure if that's the NEO Incorporation, so we need to double check this. So always check that the equities reflect correctly, but it feels like it should be the right NEO car manufacturer that we're interested in. But the other way around, let me see if this would work, if the formula would work. The change divide by the previous close, it would also work the same way, as you can see, because that's the change, whether it's a positive or a negative change between the two dates, between the two amounts within these two dates. There you go. But I'll revert back to the way our formula, so it's kind of clear for everyone that it's the last price minus the latest price minus the previous close divided by the previous close, which will give us the percentage growth or decrease. Volume, it is very simple. Once again, all I need to do is I'm not going to use this time around, but all I need to do is to see where's my latest Google Finance uh, formula. So this is here, and for the volume, Google Finance has the volume attribute, and you just need to type volume. So there you go. That's the let me just have a quick look for you. So the volume for the specified date, the trading volume for the specified date, this is what you have. Um, so I will leave the year-to-date return and the 52-week chart for the second part of the video, which I think is going to be the most exciting one for you. So for now, let's do 52-week high. It will be as simple as 52-week high is that, once again, if I will go at the top here, so high 52. So therefore, all we need to do is we need to type the high 52, and there you go. That's the highest price within the 52 weeks. So therefore, the app for the Apple, it was $260.09. Let's understand actually the percentage. And this is, once again, this will be quite an interesting one because we'll see whether the stock has increased or decreased over the past 52 weeks. And once again, we'll apply the same formula. So the last price actually this time around minus the 52-week high divided by the 52-week high. And actually, we can see that the Apple stock, and it's quite obvious by the difference in the price, that Apple stock was at the 52-week high was 19.2% more than it's currently trading at. So I'll accept suggested autofill. So as you can see, for the past 52 weeks, I mean, none of the stocks is actually performing well, with exception here, the best performance came from the Netflix actually. So I'll leave the 52-week chart later on, but for the 52-week low, it's as simple as I'm gonna copy this. And what, by the way, when I copy this, the reason why it allows me to simply copy here and then change the attribute to 52 to weeks high to 52 week low, and again, once again, I'll press just autofill, is that I've locked my column B here, and therefore that's how easy it is. I can copy, but the cell within the ticker, so that's very important, remains the same. So all I need to do right now, once again, is apply uh, the same way that I've done this in the 52 weeks high, but all I need to do is the last price minus the 52 weeks low divided by the 52 weeks low. So give me a second. We forgot the division here to see by how much the price is higher. So as you can see, actually, when I look at this, somehow the stocks are very much in the middle. But once again, I think you can clearly see that the Netflix has doubled, like grew 104%. Like seriously, the Netflix has been going very well, very, very well. And obviously, I'm not gonna lie, we can see that our top best is actually Palantir, which is for those who really obviously look at the stocks, it's not a big surprise that actually that Palantir is the biggest one. So that's the thing about it, right? So very simple, by the way. If I'll do the following first, so for example, the market cap. Once again, I need to select the latest Google Finance, and instead of 52 weeks low, I need to type more. What's actually, let me, sometimes you do forget, so let me have a look, market cap. Oh, okay, so as simple as that. So all we need to do is type market cap here, and there you go. So the market cap. The only thing with the market cap, we'll close the help for now. I don't think we need it for now, hopefully. But nevertheless, remember to use the help option from Google Finance. The main thing about the market cap is that all these long numbers doesn't give us a big doesn't give us like I'm confused with these numbers. Are these millions, trillions, billions, whatever they are, thousands, 100,000s? So all I need to do, what I would my suggestion, my recommendation to you, and given that most of the companies within S&P 500 will trade in kind of the market cap will be expressed in billions. So you'll select this range here. You'll go to the format. You'll go to the number custom number format, and here is where you will type, let's see, so 0.00, and then you'll type comma 3 times for each three zeros that will have, and obviously the billions for the will, so each comma will correspond to 1,000, which means we're taking those three zeros. And then if I'll press space and type B, when I press right now apply, this gives me a market cap in billions right now. So obviously we do know that obviously, okay, fine. I'll accept that sum, such as who's this, is this NVIDIA, yeah. So maybe for NVIDIA, you could have done this in trillions, but nevertheless, if you want to do this in trillions, you need to have another comma and type T there. So it's another 1,000 that you're adding. But a recommendation is giving the NVIDIA is the only one as far as I can see. No, it's not the only one. Obviously, it's the Google as well, which is in billions, trading billions, and Apple sorry, so it's Apple, Google, this is Palantir, no, but yes, so it's only Google, Nvidia, and Apple are trading in trillions. Therefore, my suggestion is really keep it at billion level, and you don't need to change it to trillions. Once again, EPS, as simple as you copy the previous formula or use the Google Finance and type the attribute of EPS. The only thing here I need to be mindful is that I'll probably need to do something like this. I will copy from the formula from the previous close because this is in the financial the number formatting just to keep it as simple as that. EPS 6.29. I'll accept that, and P ratio is the same. So all I need to do is I'll copy this and then type PE here, and this will give me P ratio as well. Boom, and there you go. Look at this. We've completed, we really completed in such a short period of time, nearly the first part of our watch list. Now, in the second one, let's first focus on year-to-date return, and then in the final part, we'll make a dynamic trend line which will reflect the 52-week chart. So let's do this. All right, we are back for the second part of this tutorial, and let's focus on year-to-date returns. So what we need to do right now is that we'll be using our core function, our core formula, which is Google Finance. Uh, Again, I'll start by selecting my ticker, and the attribute to start with, we'll select the price attribute because that's what we want. So essentially, if we do it like this, given that we have, so this will be in the percentages. That's why we are having this. Let me, for this, actually, for this exercise, for the purpose, let me move this formula here where we have actually the numbers. So let me do like this, and I'll delete it from here. So focus on this part here. So on the cell B23, actually, okay, to have a separation, just to have another row so we don't get confused with this. So let's do the following. So this is where we want to focus, right? Now, what I will do right now is that I will create, I will put the comma. As you can see, there is a square brackets, which means that these are the optional parts within the formula. So these are the optional, so the interval is an optional argument within the formula, within the Google Finance formula, and I'll need it. So the next argument is a start date, right? So for the start date, I need to do the following. I need to type the date function, which again, once again, within the date function, I will select the year function, and within the year function, I will select the day function. Don't forget you need to close the brackets for today and for the year function, because once you close the brackets, you enter comma, then you'll have a month and a day. So we want to make sure this is, so by this, we are assuring that if this watch list goes to the 2026, it will, through the year today function, it will always pick up the right year, and by 1 corresponding to the month and the day, it will pick up the 1st of January of the specific year that we are living in. So today, obviously, currently I'm recording this video in 2025, so therefore this will be respect to the 2025. Once you've done with the start date, essentially argument, again, you press the comma, don't forget to close everything, and then the end date. So for the end date, it's as simple as today. So it's dynamic, and it really works out the best, kind of dynamically reflects the today. Therefore, it will change automatically in the basis of the price, which will happen, for example, tomorrow. So it will update automatically. So if I'll press enter, let's see what it does. So there you go. Look at this. It will list all that we need to do. But the key part right now is that we'll have to wrap this Google Finance formula in the index function because we need this price here. We need 243.85. So for this, I need to wrap the Google Finance into the index function. And within the index function, you can see I have the reference, which is where my kind of my data frame will be, or the core where the data is, the core information where the data is, and I need to select 2 and 2, which means I want to have a second row, and from the I need to descend to the second row, and I need to go right to the second column. So all I need to, and hence, so the first column and the second column, the main row and the other row, it's going to be down. So press enter, and there you go, 243. So that's the price that we wanted. Therefore, right now, if I'll take this formula up, so perfectly fine. This is the price that we wanted. So right now, all we need to do is I need to do the following. I need to have a division of my last price. I need to divide by this one, which will reflect what the stock has at the beginning of the year, minus 1. It will give me this number here, which if it's converted to the percentage will give me minus 13.8%. So right now, if I'll press Control X here, which is, let me just take this formula out, Control X, press enter. All I need to do right now is to paste this here, press enter. Look at this, perfect. And double click on the blue dot, and there you go. So most of the stocks you can see, with the exception of Palantir and Netflix in comparison, are not bringing us any good returns, year-to-date return. So this is why it's so powerful, this year-to-date return formula. And once again, this will be updated automatically depending on the year where you are and the today's date. So now let's move on to the final part of this tutorial, which is 52-week chart. Right, so here we are in the final part of this tutorial. By the way, sorry for because my battery has died, my laptop. So let's finish this tutorial with a 52-week chart, and this is where we will be combining the Google Finance with the Sparkline. So as always, what I want to show you first is that I will do my formula here. This is where I'm start by typing the Google Finance. And once again, let's apply to our stock here in our Apple stock here. Once again, I will lock my column B to make sure it doesn't move. For the attribute, I will put the price on. And once again, if you have any doubts and you don't recall the syntax of the Google Sheets formula, just press the quotation mark, no, not the quotation, but the question mark, and then you will get this kind of window that really helps you to understand what are the next arguments within the formula. So at the start date, we will be typing today minus 365 days. So we want to make sure that we go back precisely 1 year. And for the end date, we will apply the today formula, which means that this will become dynamic and will move simultaneously with that will have the today. Eventually, we'll use this. If the spreadsheet will be used tomorrow, that tomorrow becomes today, and this 365 a year ago will become counting from tomorrow. So I know that you get what I'm trying to say and communicate there. And for the interval, we're going to put weekly. So when I press enter, essentially what are we having is that we have the went back 365 days, but now the price is giving on a weekly basis instead of the daily basis. So great stuff. But how do we actually do now the Sparkline, the chart? So we have to wrap Google Finance into the Sparkline. So I will Control X. I will cut that formula. I will paste it right now here. And what I will do is I will type Sparkline. Open the brackets. What as you can see, the Sparkline syntax is that you have the data as an argument and you have a number of options. So our main data for the Sparkline, this is what our Google Finance formula contains. So everything which is here, it's the argument. It's the argument, data argument within our Sparkline. So what the other option that we have is that once we press comma, we now move on to the second argument, which is options. And this is where we'll open the curly brackets, and this is where we can type in quotations, open quotation type, and type chart type, comma, line. So we want a line chart. And don't forget, here's where we are going to put a semicolon. And then, once again, quotations, we want to put the characteristic of that line. So we put line width. Once again, close quotations, don't forget that. And then just type to here. Close the curly brackets, close the normal brackets, and that's it. So what now we have built is that we've built a second option argument, which will tell us that we want the chart type in form of a line with a line width of 2. When I press enter, we'll have this reflection of our 52-week chart. All I need to do right now is double click on this blue dot. As always, it will like automatically have to fill for the rest of the equities which we have in our portfolio. And this is where it's done. It's a very important with formulas, and ultimately when you do more complex, slightly more complex stuff, it's the idea of how can you wrap one function, one formula within another. And this is what sometimes will happen with sort and filter, unique and filter. You have Sparkline and Google Finance, have many other kind of options when you have for different purposes. Obviously, they are used, but for this one, is that we'll wrap this up in Sparkline and Google Finance. For example, year to date, we've kind of wrapped up Google Finance in the index function, and as simple as that. So it's so it's the logical side that will help you to understand how to do this. So what do you want to achieve, and it will help you to actually understand the wrapping up of the formulas within each other. But nevertheless, look, it's done. I think with this portfolio built, you very much covered to understand how the Google Finance really works, the formula in Google Sheets. It's quite powerful. I think it's really cool, and I think it's for personal or business project. If you want to have this and you're building your portfolio around this, it's great. It looks great, it feels great, and there are a number of options. So once again, if you think that you need further attributes, so don't forget you can use the learn more option, and this is where you'll get significantly more attributes that you can pull. But generally speaking, the syntax is the same. So learn the syntax in terms of the ticker, in terms of the attribute, when it comes to the start date, the end date. Um, the interval that you want to specify. Although this is, for some reason, this is very slow, and I'm not entirely sure why this is slow, but uh, just really use this, and you will see how much value you can get from the Google Finance formula for your stock watch list or your actual portfolio. So I'm not sure why it's loading. I think probably we should end on this note. So once again, this is a go get this template. It's free. Try the watch list. Try to explore as much as possible. If you feel like there is something that is not necessarily here for you, and any comments if you think that I should be building on, comments below. We'll gradually, step by step, we'll improve to the more advanced um, parts within the different options. How do you, and this is where you can build advanced projects and advanced portfolio trackers, finance trackers. But nevertheless, give it a go, try it, and I'll see you in the next one. Once again, thank you all. Thumbs up if you can, and I really appreciate your support. See you in the next one.